11 April 2023, Tuesday. Today, second video now. The thing is this, I want to tell you something very critical, very important, because food prices in Singapore is going up. And this is because of the supply chain issue. And of course, the banking sector, credit line, everything is coming in together at the same time. But the thing is this, if US unemployment really start to shoot up, then things can get very, very scary. And that could really send the S&P 500 all the way down to 2950. And think about this, we are at 4,000 right now. To go down to 2950, we're talking about another 38% drop. Do you think it's possible? Let me share with you right now. So once again, guys, disclaimer apply as usual. Today's a must-watch video. It's going to be very impactful. Watch it all the way. And thank you, Ames, for the kind sponsorship. Now, look at the price in Singapore. Oh my God, this is from Straits Time. Look at it. 50 cents for milk in fish soup, 20 cents for beancurd syrup. Price are really going up. Now, whether it's profiteering, whether it's because cost is going up, we all know that in Singapore, prices are getting a bit crazy. Look at this noodle, nothing much itself, and it costs approximately about $6 to $7. This is really incredible. And look at this, this is like, oh my God, this is the bak kut teh, $6 a portion for two pieces of meat. Oh my God, guys, think about this. So it's not something that we don't know. Singapore food prices is really soaring to 14-year high. I can tell you this will not stop. Look at it, just during pandemic time itself, we're at 2%. Now we are 8%. This is something that comes from Bloomberg. So think about this. This is really incredible. And this is local delights. We're talking about really. So look at our prices from eggs to tomato to apple to carrots to watercress, vegetable, minced meat, everything is go up by easily 10 to 20%. So think about this, guys. All this thing because of what? Because of this, the Baltic Dry Index has fallen from its peak to today itself by 87%. Now, what does it mean? That means that there is a contraction in the entire economy, and we are now back to the same level. And think about this, what can be worse? That means that things are going to get very scary right now, because we can see that the yield curve has now reached all the last 40 years low. And think about this, what will happen very soon? Well, very simple. When low employment comes in with the federal increasing interest rate, right? Think about this. Remember when I was saying that there'll be a 25 basis point hike for 3 times in a row? That will be in this March, then followed by May, then be June. And when I said that itself, everyone was lying. I was just laughing over it and said that this crazy Cal. Everybody knows that there will be a rate cut soon. I said, no way. There will be more rate hikes. And if more rate hikes start to come in, less rate cut, what will happen? Come on. So, but the thing is this, you may say, but Kel, the stock market is going up. That's my point, guys. The stock market is going up because everybody thinks that things is fine, but we can see the food prices going up and there's more rate hike coming in. So all this is going to hit us just a matter of time. So that's the reason why you can see right now the market have readjusted back. Then was looking at a rate cut coming in, but now it's back to 5 to 5.25%. This rate by this year, but of course I'm seeing it at least 5.5, and if we can get a little bit crazier, we can even see 6%. So all these things tells me that this is going to happen very soon, because proven, all right, proven from the last how many years we're talking about, since 1948 until today. That's basically more than 70 years of statistics. Basically shows that the average S&P return 6 months prior to the start of rising unemployment and in the 9 months hereafter. So which means that the worst return always seen in the first 3 months when you have rising unemployment. But of course you will say, Cal, there's no problem now. The unemployment is still pretty good. Exactly my point. The unemployment is still now at a very low rate. And that's what is making Jerome Powell have enough room to continue to rate hike. So think about this. The moment he continue rate hike and then the earnings coming down, there will be a wave and wave of selling, which means why? Because take a look, if we look back at 2020, look at it. 2020, when looking in the term of technical, when the market breaks below the 200-day moving average, okay, this is the 200-day average, this is the S&P 500 using the chart itself right here, you can see what happened. Once it breaks down, the market sold down by another 16%, okay? So take note of that. So the last time we saw this, when the market basically came down, and it came down to this point, look at the S&P 500, it did go below the moving average for a very short moment. And then after that, you can see huge volume came into buy. and the market recover from there. So let's say we look at it again. If there's going to be any time again, if it breaks below this, now I will say this another 16%, identical, that will send the S&P 500 down to the 3,000 mark. All right. So this is just purely based on what happened back then, when the market lost the moving average and the market dropped by 16%. At this junction here itself, the market came down by 16%, and that was S&P went. And that is how low it went. Let me take a look. It went down all the way to 2,200. So if I look at it from now, if the market ever dropped by 16% from the moving average, right, we can come up about 3,000 to 2,950. So that's the first thing that I get my 2,950 from. But put that away, let's look at something even more incredible. Now take a look at this, guys. This is something that you can see very clear. Whenever there is a rapid increasing of unemployment rate, the stock market usually will sell off, right? From 1972 all the way to now. So you look back at the chart again, this is where we redo it again. I'm going to break it down for you what happened in 1974, 79, 90, 2000, 207, 2020, and you'll be amazed by this. Let's take a look. So first of all, in 1974, let's take a look right here. You can see that the moment the unemployment numbers started to go up, right? That was where the S&P 500 was trading at 93 back then. And of course, it went all the way down to the average of 65 before recovery. Can you see that? So that was where in 1974, April, we have the unemployment numbers going up, right? All the way to here. Then after that, itself in 1979, that's 5 years down the road, that was where again, the unemployment started to raise up. The S&P 500 dropped this time much lesser, was 110 at one point, and then it went to a low of 100. And of course, you can see that the unemployment data still continue to go higher, and later on, then we saw the big problem. But let's put it away first. So now we have these two numbers on our hand, so which means that the mathematic is that from this point here, it's down by 30%, and here's down by 10%. Okay, got the idea? Pretty cool, right? Let's continue. So now the thing is this, we look at 1990 right now, you can see once again that the unemployment data start to shoot up. It was flat for quite a while, but it started to shoot up in 1990. The S&P 500 was trading about 360. We didn't take the highest point, we take the average level, 360 to an average of 300. So think about this, how much percent is that? That'll be down by 20%. Okay, got the idea? Yes. So again, we move on, and the next one is actually here. Back in this year 2000, where the unemployment data started to go up again, and S&P at average price of 1350, not even the highest point, and the last time it go as low as 960 before it rebounded, because we all know that there was some help later on by the Federal Reserve. So how many percent is that? That means the market down by 29%. Wow, okay, amazing, right? Okay, so let's continue again. Now, 2007, all right, we can see the unemployment data start to creep up since over here in 2007, and then the S&P 500 was 1,005. The lowest is went about 700. So how much did it drop by then? It dropped by 53%. But also this duration was pretty far. It's like basically about 1.5 to 1 and 2, almost 2 years, yeah. But still, there was no reprieve along the way, so that's why I chose this point here as well. So now the thing is this: we put them all together, right, guys? Think about this. Even during the during the COVID period, okay, I see here period whereby you can see the unemployment shot up, right? The S&P was trading at 3,003 on average, and the low is about 2,200. So that will give us the thing of about 33%. Now, of course, you may say, but that is during the COVID period. It cannot be utilized this. Well, to me, is this as long as you have unemployment shooting up itself, whether you like it or not, it will affect the economy. And of course, that will mean that S&P 500 will be affected. So now if you look back again on this chart right here, right now, you can see this very clear that whenever that we have this happening itself, things will get very scary, right? So now where are we right now, guys? We are now right here, where the unemployment data is not up yet. So look at it and compare and contrast. We are not even going up yet. So if you look back again from 1974 all the way when the unemployment data goes up, right? The average itself, you can see numbers are all here right now. 30%, 10, 20, 29, 53, 33, right? Of course, we take the average is 29.1%. Now we take the median average, meaning we exclude away the highest and the lowest one. So we take away 53, we take away 10, the remaining, we get the average itself is minus 28. So think about this right now. If the market is to drop by 28% from where we are right now, the S&P 500 will drop all the way to 2950, which happened to be the same number that I was sharing with you with the moving average. Do you think this is crazy? It is possible. So guys, let's hope that the unemployment data don't go that crazy. But if it does go up, prepare guys. Anything can happen. This is Cal signing off. Bye-bye.